Are you thinking about buying a home in 2025? With interest rates shifting, home prices fluctuating, and new programs rolling out, is now the right time? Or should you wait? Let's break down the pros and cons of buying a home in 2025. A pro of buying a new home now is the mortgage rates have stabilized. As of early 2025, the 30-year fixed mortgage rates are averaging around 7 to 6.5%. Economists are predicting rates could decrease slightly, and by the end of 2025, interest rates could be in the low to mid sixes. What we saw a couple of years ago was a huge jump in interest rates. If you remember, interest rates were as low as 3% during the pandemic, and I saw interest rates lower than that. Then when the Federal Reserve started to try to fight inflation, the interest rates started to go up and they went up significantly. They went as high as about 8% in October 2023. Now, just to put it in perspective, it was only 8% for like a week or two, but during 2023, the interest rates was in the high sevens for a good bit. And then there was a point where I'm sure people were wondering, like, how high are these interest rates going to go? It was a bit of a shock to the market, and that's why the Federal Reserve did it, to help inflation. Now it appears that interest rates are stabilizing, and like I said, it's predicted to stay stable. Why interest rates matter for buyers is, in theory, lower interest rates equals more affordable monthly payments. Another pro is that more homes will be available in 2025. It's projected that home inventory will increase by 11.7% this year. So what this means for buyers is there can be more choices, and potentially it may be easier to find the right home. It also means that there could be less competition, and less competition means you could have more negotiating power. Sellers may be more willing to offer concessions or closing costs. Now, I do want to take a moment here to mention that real estate is hyper-local, so when you hear me say some of these stats like home inventory is supposed to increase by 11.7%, this is national. So you're going to see some areas that are still pretty hot and homes are going under contract within a couple of days over asking price. You're also going to find areas where real estate is slow, and I would even venture to guess that the housing inventory is way more than other areas. And then you're going to find some areas that are more in the middle. If you need help finding a real estate agent in your area, go to my website, workwithdang.com, and I can help you. Another pro is home prices are stabilizing. We're not seeing the explosive growth that we were seeing a couple of years ago. However, home price growth is slowing down, making affordability slightly better. But I do want to be super clear here, even though we're not seeing home prices grow exponentially as they were, if you ask people, I'm guessing they would probably say home prices are overpriced, generally speaking, which I don't disagree with because I completely understand. From 2020 to now, home prices have increased over 40% in a lot of areas. That is a huge increase, and more than likely your paycheck hasn't increased 40%. You're lucky if it's gotten maybe 10% more than it was in 2020. Regardless, with home prices stabilizing, this is good news for buyers. There's less risk of overpaying. When home prices increased as quickly as they were a couple of years ago, it was really hard to make sure you were putting in an offer that, number one, was going to be accepted, but also one where you weren't worried about overpaying. We're not seeing as many extreme bidding wars, so that also helps with not overpaying for a home. Again, real estate is hyper-local, so there are some areas where there are a lot of bidding wars, but maybe even in those areas, it's not as extreme as it was a couple of years ago. Another pro is there are some new government assistance and first-time homebuyer programs, and there have been some updates to some of the existing ones. For example, there's a first-time homebuyer savings account. A first-time homebuyer savings account is a state-sponsored program that allows people to save money for their home with potential tax advantages. Contributions and interest earned in these accounts may be tax deductible or tax-free depending on the state's regulations. Each state sets its own rules regarding contribution limits, eligibility, and tax benefits, so definitely reach out to your real estate agent or your lender. They may be able to point you in the right path. Also, Google is always your friend. There are also homebuyer assistance grants. The Homebuyer Assistance Grant is a financial aid program designed to help first-time homebuyers with down payment and closing costs. These programs are typically administered at the state or local level, with eligibility criteria varying by location. In 2025, some states have increased their grant amounts. When you start to get ready to buy a home, you want to check to see if you qualify for any first-time homebuyer programs to lower your upfront cost. And another note here, you will hear me say first-time homebuyer programs and things like that, and it's not always just for first-time homebuyers, they just call it that. It's going to vary, but a lot of times I've noticed these programs are for people who've not owned a home in the last 3 years. So you don't necessarily have to be a brand new home buyer, but typically Typically for these grants, you won't be able to currently own a home, but there are always exceptions to the rule. Another pro is real estate is still a viable long-term investment. Home values historically increase over time. For example, buying a $400,000 home today could be worth $500,000 or even more in 10 years based on historical appreciation. Not all that long ago, there was a real fear that there was going to be a housing market crash, and I'm sure some people still believe that that's something that's a possibility. But what I think we're seeing with home prices stabilizing and the interest rate stabilizing, I think this shows that a market crash may not be around the corner. Of course, not everything is amazing in real estate. Let's go over some of the cons of buying a home in 2025. Mortgage rates are still high. Even if rates drop slightly, they're still higher than what they were a few years ago. In 2021, rates were 3% or lower. Today's rates are around 7%, which means you have a higher monthly payment. Here's an example. A $400,000 home with 3% interest is $1,686 a month. The same house with 7% interest is $2,661 a month. That's a difference of $11,700 more per year. If rates are too high for your budget, consider waiting before buying a home. I think a downside to that strategy is we just really don't know when and if we're going to see those 3% interest rates again. Another con is high home prices still make affordability tough. The median home price is over $400,000, and that will price out many first-time home buyers. And even if you're not a first-time home buyer, you still may be priced out of buying a home with how expensive everything still is. Also, high property taxes and insurance costs are making affordability more difficult. Some areas have always had high property taxes, and then some areas have started to increase their property tax recently. Also, in certain areas of the country, home insurance has gotten very expensive for people. I'm in Florida, and I've seen people's insurance increase by hundreds of dollars a month. This is making it very difficult for people to still be able to afford their homes. If home prices are outpacing wage growth, affordability will continue to be a challenge. There's this rule that you're able to calculate how much you can afford based on your salary. There's the 25% rule, which means you never spend more than 25% of your monthly take-home pay, which is after taxes, on your monthly mortgage payments. That also includes your mortgage principal, which is the loan amount, interest rates, property taxes, home insurance, mortgage insurance, and HOA fees if that applies. The median household income is $80,000, but the median home price is over $400,000. This makes it very hard to follow that 25% rule. You may lose money if you sell too soon is another con. If the market dips, short-term homeowners may lose money. Selling too soon means you may not have time to build equity. If you're going to buy now, I think it makes sense that you should live in the home for at least 5 years so you can ride out any market fluctuations. And really, to be on the safe side, I would think living in the home closer to 10 years is a safer bet. I've seen some people who bought homes during the pandemic era and ended up wanting to sell soon after they bought the home. And some people got lucky and sold at the right time when home prices were rapidly growing. Other people I saw that didn't fare as well and ended up taking a loss. Another con is maintenance and unexpected costs can be a financial burden. Homeownership isn't just about the mortgage payment. There are repairs, maintenance, and unexpected costs, and those can add up fast. If you're a renter, you can call the landlord for fixes, but homeowners, of course, pay out of pocket. Experts recommend budgeting 1 to 3% of your home's value per year for upkeep. What that looks like is on a $400,000 home, that's $4,000 to $12,000 per year. A roof replacement can be $10,000 to $20,000 depending on where you're located and the size of the roof. HVAC repairs could be anywhere from $3,000 to $10,000 or more if you need to replace the whole system or a major component of the system like the coil, for instance. Plumbing emergencies could be anywhere from $500 to $5,000 or even more than that. I don't say any of these numbers to scare you, but just to let you have the realization that homeownership can be expensive. I remember when I bought my first home in my early 20s, it was a home from the 50s. It was a very nice home that I loved dearly, but it had some things that needed to be updated. It seems like every time I had someone over to look at something to fix it, the going rate was $10,000. It was $10,000 to change the AC, $10,000 for a new roof, $10,000 to change all the old plumbing. It was pretty out of control. Now, just a little caveat to that story, sometimes I think people kind of can tell when you're a new homeowner and try to take advantage, so I didn't take any of those $10,000 bids. As I mentioned before, property taxes and home insurance are getting more expensive in some areas by a significant significant amount. This could make the mortgage payment unaffordable for some people, because most lenders do have you wrap up the property taxes and home insurance in your monthly mortgage payment. If the mortgage payment becomes unaffordable, then you might have to potentially sell your home or consider a foreclosure. That's why when you're budgeting, I think it makes sense to give yourself wiggle room. You don't want to buy at the top price you're approved for. I think when budgeting, you should pay close attention to what the monthly mortgage payment is and ask around if the property taxes are projected to increase. What's happening with insurance in your area? Do you have an HOA that might have an assessment coming up? Another con is there are tighter loan requirements. Lenders have tightened up lending standards due to economic uncertainty, making it harder for some buyers to qualify. There are higher credit score requirements, stricter debt-to-income ratios, and increased scrutiny of income stability could make getting approved for a mortgage more challenging, especially for first-time home buyers. So at its core, I agree with all those things about having tighter loan requirements. I think it does make sense that if you're going to have a loan, you do want to make sure that you're financially stable and that it's a viable thing for you to be able to pay for 30 plus years. However, what this has done is it's made it more difficult for people to be able to buy a home in an already tough market. Please like, comment, and subscribe if you've gotten any value from this video. It helps me out a lot.